Jonas Benedict Dorling. We got another interview, and we just finished it. We're wrapping it up, so we're talking about it now. How do you feel at the conclusion of that? Even though the money miners haven't heard of it yet, you feeling good,
mate? It was a good time to talk about all this stuff. Lithium, batteries, everything from the whole supply chain. Given everything that kind of happened last week, right? So huge kick up. There's no sort of new news for people on that front in the lithium world, but I think a lot of people are on edge, starting to see, is this the string that breaks the camel's back, and lithium is on a bit of a kick?
People are on edge about that just as much as they are on edge about picking up the phone and getting in touch with Axis Mining Technology, because they are just the absolute best at what they do, mate. They actually answer the phone. They're going to be at ADIA. They're going to release something that's going to make life even easier for the geos and the drillers out there on the RC rigs, which are, finding the stuff that we talk about on the show. JD, it was Andy Leyland that we spoke with. Give me a bit of an everything you know about Andy.
Mate, I'll give you the spiel. So obviously everything going on in battery metals right now, I thought it'd be good for us to just check in with one of these people that follow the industry pretty closely. So Andy, co-founder of SC Insights, he spent a bunch of time at the likes of Benchmark and Woodmac, just following the industry pretty closely. And, despite the positivity that we got in the last couple of weeks, it's pretty clearly in the gutter. We see all these sell side reports coming through, right? And they're saying it's cooked. The EV kind of narrative has been smashed to bits. You can sort of see that in all the lithium names and everything. So I thought, why not get someone who kind of lives and breathes this stuff, get him on. He's pretty keen. He's calling in from Holland at a fast markets conference. So it's 7 a.m. So, thanks to him to making the time so early. But I think with that intro kind of said, we'll flip over and get into the conversation from everything from lithium to EVs to stationary storage and a whole bunch more. Alrighty, Andy Leyland, thank you for taking the time to join us nice and early in Europe where you're calling in from. And I think the logical place to start this one is to get a feel for the sentiment in the battery industry right now. You're at a conference, so how are things looking over there, mate?
Yeah, I'd say there's actually a little bit of quiet optimism, which is interesting because, you basically in this industry, you had 3 or 4 years where every week, there was a multi-billion-dollar announcement of a new asset going up, or a new mine or a new battery factory. And then for the past 6 to 8 months, every week has been about a closure, about a suspension, about a delay, and subsidies, etc. So it's been very negative sentiment across the industry, and the whole supply chain's been in oversupply. But I think now there's that sort of view that, actually the situation we're in is completely unsustainable. And that goes all the way through to the mining side of the market. And people are starting to realize that, things will get better. This is a sort of more temporary bump in the road, and that there is still a future to the lithium-ion battery supply chain. So I'd say not quite a sort of, huge turn in sentiment, but perhaps there's a quiet optimism.
You'd sort of, the numbers I'd heard you kind of put to EV growth specifically was 25%, which is, really strong by any kind of count. How do you sort of see the market tracking to those numbers? That was 24. There were numbers you'd put out prior. So how are we kind of going on that front?
Yeah. So what's happened is, China's sort of surprising on the upside, and they're bringing in a bunch of new subsidies, which are really supporting the market. And Q4 is typically, after the autumn festival holidays are having it at the moment, typically when, sales are very strong. So potentially we've got a little turning point in China there, coming up on what's already been a strong year. They recently just had their first month of selling 1 million new energy vehicles, in 1 month. But that's sort of, caveated with what's happening outside of China. And there you've had a pullback in subsidies in a number of European countries. You've seen sales, stagnate, or sales growth stagnate in a number of countries. But again, that's partly due to model releases. So the US data, for example, for EV growth, if you exclude Tesla, it's up like 30, 40%. I mean, it's crazy. When you include Tesla, who haven't launched new models and haven't increased their production, then it doesn't look as impressive because they're, half of that market. But the underlying fundamentals of the EV side look very good. The other thing to understand is that, we've still got this political end date in the 2030s of, phasing out pure internal combustion. And as long as those don't change, then everybody has to still work towards having, a battery in every vehicle. And it really is, the only game in town when it comes to technology. You've got sort of 15 million sales of battery electric vehicles versus 20,000, 10,000 hydrogen vehicles. There's no challenge there.
Are those end dates really are they really sort of, do they still hold any real legitimacy? Because I almost maybe I come at it from like a cynical lens, or just like, the way humans behave is kind of, someone pushes back a date and then kind of everyone does in the corporate world, and you kind of kick the can down the road and buy a bit more time, but you sort of just look good at the time and appease the the ESG folk at the time. But from the political perspective, is that 2030 date? Is that still real? Is that still legitimate? I
think, other than a few exception cases, you're looking at 2035 or after that. The UK have flip-flopped a little bit on whether they're going for 2030 or 2035, but, isn't really a big enough market to make a huge difference. The change comes in that, once you've committed all of the producers that they have to change their supply chain to this and that they have to produce these vehicles, well, it doesn't make any sense for them to run two supply chains. So it really, as long as they're convinced to do it, and they're going to be pretty annoyed if you keep changing the targets and moving the goalposts. The sort of openness, I guess, the targets comes from how you deal with hybrids, because you can just put a tiny battery and have a mild hybrid. You still get your internal combustion engine, and that in theory you could still meet some of these targets. How much that happens is kind of dependent upon how the rest of the supply chain builds out. Because at the moment, I think people are realizing that we said everybody needs to drive hybrids or EVs, but that's creating loads of jobs in China, and it's getting rid of jobs in Germany and the US, which is politically unacceptable. And so now they're sort of realizing, actually, maybe we want to slow it down a little bit because we need time to build these supply chains. And it's very difficult to build the supply chains at the moment because China's put the whole world into oversupply for cathode, for anode, for battery cells, for all the manufacturing parts of the industry.
So what's the kind of mood on the point of hybrids at a conference like that, and the people you speak with quite regularly? I mean, we can sort of feel it anecdotally with perhaps more the fund manager side of things. They're starting to pay a whole lot more attention over 2024 to hybrids, to, EVs, all these sorts. And they'll point to the numbers ticking up in China. How big a sort of, space in your mind and your thinking is hybrids taking in the conversation?
So I think a lot of the OEMs are sort of betting on hybrids because they make more money on them and their shareholders like that. And, they're trying to sort of push this narrative that it's the best of both worlds. It's rubbish. It's complete BS. They're the worst of both worlds. You've got two supply chains. You're carrying around two technologies. You've got effectively the great thing about, a battery electric vehicle is you've only got this relatively simple technology and the maintenance costs are very low. Now, the OEMs, they make a lot of money on maintenance. If you've got a plug-in hybrid, that might be great, but in 3 or 4 years, you're going to have all the maintenance costs, and perhaps even higher than you have an internal combustion vehicle. And you'll probably realize that you're using the battery 90% of the time. Why are you paying to service an engine that you hardly ever use? And, we talk to a lot of mechanics who are dealing with these plug-in hybrids, and they're like, this is ridiculous. The maintenance costs are astronomical. And these people are only really using the battery, or they're only using the engine and they're just dragging around a battery that they don't particularly need. So I think it's a very stopgap technology, and it's a bit the analogy we always use is, steamships with sails. When they first brought in steamships, nobody trusted the technology, so everybody put sails on these big ships. But it's ridiculous to have an engine and a sail. So that, that only lasted for a couple of decades, and then everybody, trusted the new technology. So I think that the plug-in hybrid side is, I don't think that's the answer in the long term. It's a very interim measure, at some point they'll start getting a bad rep.
Hear that, mate? It feels like a pretty contrarian view. Plug-in, the whole hybrid kind of narrative is rubbish. That is that's just so.
What does it kind of make you think of, mate?
But I almost feel like the hybrid story is like, everything we've been hearing. It's real contrarian. So it's rubbish. But you know what else is a bit contrarian? Like on that thought, I think it's quite quite contrarian for these, like, junior mining companies to go into production without actually having to fork out a dollar off their own back to actually start producing. That's a contrarian way to go about producing anything, don't you think?
Mate, I'm thinking it's contrarian right now, but it won't be for too much longer, will it?
It absolutely won't be, because I've seen the likes of MMS, mate. MMS have done that. They've worn the risk to get some operations into production with these very unique risk sharing kind of like joint ventures. Really, really innovative stuff. But they're getting phone calls left, right, and centre for all sorts of jobs. It's not just the JVs. They're mining dirt for Red 5. I saw the other day. It's soon to be called Volt. Oh God, I'm never going to get used to that. But I am used to MMS, mate.
Mate, they do a whole bunch. But look at this: mine site support, contract mining services, drill and blast services, dry and wet hire, engineering support, workshop support. I mean, if you don't want them to come in and take all the risk and do the mining for you, just a small share in the upside, then look at all those other things. They can solve any problems you got with your open cut mines. Just give the guys at MMS a call.
Be a contrarian. Be like MMS. Give them a call. If cost is the thing the consumer worries about, maintenance cost or whatever, then like surely the upfront cost is also a pretty big factor in that equation, because these plug-in hybrid sort of all in cost is super attractive on a relative basis to the BEVs. And if you can't blame the consumer for just like wanting something that's affordable.
Yeah, and this is where it's interesting, because the market outside of China is basically a couple of years behind. If you look at the models, if you look at the prices, etc. So what we're seeing now in the Chinese market, which is very much where we're getting to in Europe and where we're getting to in North America, is some of these vehicles are now outcompeting on every metric. They outcompete on sticker price. They outcompete on total cost of ownership. They outcompete on, comfort, speed, things like this. And in a market where you have a huge amount of charging infrastructure and less range anxiety. So, I think that will start happening in other markets. It's going to be really specific though, because, you'll have, cities with good charging infrastructure where, an electric vehicle just makes more sense, where you'd have to make a conscious decision to go for internal combustion. Now, that's not going to happen in rural Australia or rural US, overnight. It'll take another 10 years for that to make more sense, because of the ranges, because of the charging infrastructure, etc. But you will start getting these tipping points in different markets.
What are the kind of implications on tariffs? Because they make up a pretty substantial part of the costs in the US, in the EU, in Australia, I'm sure in time even more. And that's, part of the real factor that makes these Chinese EVs, which would otherwise be a whole lot more competitive, somewhat unattractive. I mean, can you see them going away anytime soon? Is that like a block in the road that's going to try and help the legacy EU makers for quite a while to come?
Yeah, I mean, the automotive sector has always been highly protectionist. So it's no surprise. And it's not just the EU and the US, Canada, Turkey, India, Thailand, they're all putting restrictions on Chinese EVs. The interesting thing is, in Europe, if you put a 20-30% tariff on EVs, we don't have the 100% tariffs here, but we're around that level. the Chinese can swallow that because they're already selling their vehicles at a 40% premium to their domestic sales price. That's how much cheaper they are. Now, what will happen is you'll just get more Chinese companies investing in Europe, investing in India, investing in Turkey, and you'll get more domestic production, which is what the governments really want. They want to keep their domestic industries, and those industries will just become slightly more, Chinese. But that's exactly what happened with the Japanese and South Koreans, over the past few decades. So it's a well-known playbook.
So on a slightly different tack, I mean, the wording that we've been hearing a lot lately is that the writing is on the wall for these EU car makers. I guess the same kind of goes for the battery makers that come out of Europe, and you can sort of say the same for the US. If you were sort of in a different position, say you're working with the EU, what do you kind of do to make the West more competitive against the Chinese makers, or do you see that as a sort of matter of course that they're going to be the dominant car makers for the world in 10, 20 years' time?
Yes, I mean, the Chinese have overtaken in terms of technology, commercialization, and commercialization of innovation, basically. There needs to be, and I think the EU, manufacturers in the EU itself recognize this. We saw a big, Draghi report about what the EU industry needs to do. It needs to increase investment. It needs to increase commercialization, because at the moment, China are rolling out new industries while we're still, looking at the drawing board. So there needs to be an acceleration, and there needs to be a slight change in, how often you do vehicle refreshes, how you bring new technologies to the market. When it comes to competing with China, I mean, it's going to be very difficult because they've got such an advantage now. And you look at the number of researchers that companies like BYD and CATL have, and it's in the thousands, and it's very difficult to compete with that. If you've got 70% of the market, and you're putting 10% in your R&D budget, nobody else in the industry can compete with that. So yeah, it's going to be very difficult to catch up. And I think the answer comes in, a lot more collaboration. And again, that's nothing new to the automotive industry. It's full of collaborations between, just sort of announcements with GM and Hyundai and Ford and BMW. And, there's lots and lots of collaborations like that.
Where do you sit on the kind of the role for government in all of this, Andy? I'm kind of curious too. I mean, are you kind of, yeah.
I mean, you need government support outside of, if you're going to compete with China, because effectively, China got government support to build out these industries. Now they're in oversupply. If you've got a factory that exists in a market that's in oversupply, you produce at cost to keep the factory open. Okay, great. That's just the simple economics. China's got its comparative advantage. But if you then want that industry in Europe or North America, you say, well, hang on, it needs to make money because otherwise there's no point investing in it. Well, it can't make money just from market forces because it can't compete with the existing oversupply industry. So you need those barriers there to support it. And that's what we've seen in the US with the Inflation Reduction Act. You've seen that copied in Canada, and in Europe as well to a lesser extent.
I always thought
there really is that government role.
Yeah, I always feel a bit kind of. If I'm remembering economics class correctly, it was sort of like it's pretty rare that you have these protectionist policies actually result in like a durable competitive advantage over time. You often just end up infinitely subsidizing an otherwise uncompetitive industry. But I wonder if that's kind of what the West has resolved to do.
Pretty much, but you have to remember it's a failure of the market to address the pollution caused from the transportation industry, which is being addressed by another, market manipulation by having this political target. It's not necessarily consumer choice. There's a political mandate to end internal combustion. So it is something, where governments are involved in, and the market hasn't been functioning properly in the first place.
Yeah, I guess that's a fair point in some ways, the inability to price externalities is in some part to explains the predicament. But I do get nervous about the sheer quantum of kind of money that's talked about in a lot of these different acts. And like, you know, one party is like, you know, worrying about what it means for the long term in a lot of these countries where like we've never been more worried about the size of government debt and the ability to service that over time, and kind of, you know, you overlay that with a workforce that gets kind of, you know, like is not able to keep in touch with the phenomenal like productivity gains that China has had in its manufacturing sector as well. Yeah.
But then, you know, you look at what happened in other industries, you know, China through the 2000s, you know, went from, you know, a very low percentage to the vast majority of steel production, you know, likewise in solar panels. And, you know, it floods the global markets, it pushes them to oversupply, nobody else builds anything. And then, you know, then you look back 10 years later, you're like, hang on, China's the only game in town.
Yeah.
Because, you know, you have this huge race to scale there. And it's not necessarily like, you know, some sort of diabolical plan. It's just, you know, that economy is growing so quick and people say, well, you know, if I build something and I'm better than the next guy, then I'll survive.
So Andy, a pretty prominent example in the past couple of weeks is Northvolt. Heaps of articles about the kind of troubles they're facing, the Swedish government saying they're not going to step in and help them. Where do you think kind of things went wrong there? Because it didn't seem to be by a shortage of capital or investment on that front.
It's just the difficulty in, you know, a new manufacturer coming in and ramping up battery production. You know, it's not an easy thing to do. The Northvolt look a little bit bad at the moment just because, you know, a lot of other companies have got over these hurdles. But, you know, all the other battery manufacturers had struggles ramping up in the past. Now Tesla are doing it themselves. They all are also struggling to ramp up that production. And that's the real sort of challenge that they have. Because remember, you know, this is still their first major plant. You know, CATL are on, you know, BYD, Goshen, SK, LG, Samsung. You know, these guys are all, you know, done this 5 or 6 times before. They've learned a lot of lessons from that. So, yeah, Northvolt have to get the commercialization right. And, you know, it's a bit more of an industry struggle than necessarily a company struggle.
So if we kind of zoom out a bit and look at the entire supply chain, obviously there was heaps going on with lithium in the past week or so. This news coming out of CATL, which really lit a fire under the prices of all the stocks as well as the futures. Do you kind of see a bit more? Is that the first of a few bits to come? These kind of adjustments, as CATL call it.
I mean, it was an interesting announcement, but not unexpected, just because, you know, we know those mines were underwater at today's pricing. It makes sense, you know, the production cuts that we've been seeing, you know, in a market that's still seeing, you know, double-digit demand growth, yeah, just speeds up the rebalancing. But, you know, we did a lot of work on costs recently, and, you know, that lepidolite side of the market was just, you know, it was never going to be sustainable. And a lot of the forecasts out there, you know, showing it growing 50% year-on-year production, you're like, there's no way that's happening. Why would anybody do that? You know, if you're a Chinese refiner and you've got a choice, and they do have a choice as to, at the moment, as to whether they're buying, you know, Aussie spodumene or some crappy lepidolite, which is, you know, more expensive to process. And why would you choose the crap stuff to put in your refinery? It doesn't make any sense.
It's kind of interesting what you say there about these guys running underwater. I think a lot of people have the perception that the Chinese don't necessarily care. And in CATL's case, it might be just one part of the whole kind of supply chain as they go through to making the battery itself. What have you kind of picked up? Do you think that perception is kind of wildly wrong? And these guys care, you know, month on month, how much money they're making? Or where do you think they actually stand on profitability in the shorter term?
So, look, I mean, with any supply chain, particularly if you own it, you know, you've got to consider the jobs side of things as well. You know, shutting down an asset's an incredibly hard decision to make. And it's not just a financial one; it's a political one as well, because you've committed to create these jobs in an area, and you're going to push these jobs onto the government, basically to look after. So there is that. Nobody loses money for a month and shuts down a huge sort of capex intensive industry. Are they going to operate underwater forever? People generally operate underwater for longer than they should, but it's not a forever issue. The other thing, again, you have to remember, we're in this market dynamic where the market's constantly growing. And that means you constantly need to invest. And what's happening at the moment is you're just not getting that investment going into the industry. And that happens in China as well. So, the closure or the temporary suspension of operations isn't really the big thing here. It's that they're not investing in the next generation of lepidolite operations at the moment. You're not going to see China go from 10 to 15 to 25% of the world's sort of lithium extraction.
So what about the African sort of supply? That was the big elephant in the room that we didn't really see coming until, I guess, late 23, early 2024. What's the kind of view on how, we'd heard it's potentially quite sticky. How do you kind of see it sitting in the cost curve? It's hard to get decent amount of color on it.
So, I mean, for a start, let's just go through the stages at the top of the cost curve, right? When prices are incredibly high in 22, we saw a huge amount of supply, from artisanal sources, from tailings projects, really low-grade materials coming into the industry. And what we sort of figured out from that is, over about 25,000, you're going to get supply, within 6 to 12 months coming into the industry. And as long as you've got refining capacity, that will balance the market. And that sort of probably puts a long-term limit on pricing. Then you sort of go down a step and you've got the sort of mechanized lepidolite operations in China, which are operating around $13,000 per ton, say. And, that's probably the type of stuff that needs to be incentivized in the long term. And that gives you a long-term price closer to sort of 20,000 for carbonate. Now, what we also had, and as you alluded to, was a lot of this African supply coming on, which is mechanized, and particularly a lot of the Zimbabwe operations which have come on, and expansions there, which again are surprised on the upside. At the moment, those, again, I'd say they're kind of the swing producer at the moment, not on a cost basis, but in terms of, how much are they going to expand in the next year in the current price environment? Because even those operations are not making a huge amount of money in the current price environment. So again, you're going to see that investment continue. It's a real difficult one to track. We've had people down there recently, and I'm not sure we know the answer, even having visited some of the operations.
It's an interesting kind of equation for a lot of these miners that might have like somewhat marginal economics at the moment, because you're often faced with the opportunity to invest more capital and actually lower your costs as a result of that, which might give you a more durable competitive position, and sort of depending how deep your balance sheet and capability to fund that is. But then in the process, maybe you actually kind of like, lowering the whole cost curve. But do you think we make the mistake of just kind of grouping these buckets of production, like, lepidolite in China, we kind of group it and we think it's all the same cost, but there's a lot more nuance and kind of heterogeneity to the reality?
I mean, there is, but it's quite complicated to talk through 100 producing assets. We'd run out of time quite quickly. But that said, one of the predictions we made at the beginning of the year was that the prices had come down to a level where a lot of the sort of less mechanized supply in China wouldn't come back after the new year. A lot of the low grade material coming from Africa would drop out the market because it needed prices, over $25,000 a ton on the chemical basis. And that's exactly what happened. Those operations dropped out the market because they didn't make any money anymore. That's now happening with the the lepidolite side of the operation, the market in China, they're the cuts that we're seeing. So it can be interesting to look at that. I think once you get sort of further down the supply chain, then, probably you do want to start looking at some of these swing assets and swing investments on a sort of named basis. But I think it's more just for ease of reference that we talk about these sort of big chunks of the supply chain.
How do you kind of think about the brine projects lately? I mean, let's take sort of Chile and Argentina. Politically, there's been quite a bit going on in the past couple of years, and there's a pretty decent range where they kind of sit on the cost curve. And you've also got the risk of their licenses, sort of pulling up stumps in the not too distant future. When you sort of speak to clients or speak to people in the industry, are you kind of more bearish on these parts of the world, more bullish? How do you think about it?
I think as a company, we're still bullish on a lot of the Argentinian projects. Chile's a lot more difficult. You've got questions there. There's, is this an industry that's being run to make money and return shareholder value? Is it an industry run to raise a tax for the government? And more and more, it's the answer's the latter. With Argentina, it's a little bit more interesting, and I think we're still relatively bullish on most of the names there who are within the next couple of years of production. I guess that sort of brings us on to DLE and how those technologies are commercialized and implemented. The story hasn't changed there. That there's still technology risk. There's still a reasonable amount of uncertainty as to how much these processes will be able to produce on a consistent basis to meet qualification for battery grade material. And if you have to reduce your output from 20 to 15,000 tons to make sure you've got battery spec material, well, that increases your production cost by a huge amount. So there are a few issues still there in the market. If the technologies work, then they look like some pretty good Q2 players on the cost curve.
Where is that technology at the moment?
Yeah,
and it's a whole basket of different technologies. Yeah. But we do have a lot more demonstration plants, a lot more pilot plants out there, and we've got things coming on in scale as well. So one thing I would say, there's no one winning DLE technology. Different technologies work on different brines, and sometimes it's not even the parts per million of brine that's the important thing. It's the suspended solid. It's all the other stuff that's in there. And again, that equation changes by brine. It changes by technology. It changes by temperature and lots of different things.
Is that another one where you see China sort of steaming ahead? They're the ones you got a bit more hope for. Or is it a bit more spread across companies, countries?
I'd say that one's pretty much spread around. The technologies seem to come from many different countries. Whether that's the US, New Zealand, Israel, the China, players all over the shop in terms of DLE technologies. So, and also it opens up a lot more for brines, because you've got geothermal brines and oil field brines in many countries. So, I think those sort of brine operations, the smaller sort of geothermal brine and oil field brine operations, they could play quite a big, significant role in the future. They're not going to change the sort of market dynamics in the next 5 or so years. But once you've sort of proven these things, then potentially that opens up a whole new game for lithium supply, and we'll have to see then, how that competes with hard rock sources.
Yeah, I mean, there's one other sort of part of the world I'm keen to get your take on. That's production from Europe itself. So obviously you're based in Europe, and ADIA is the kind of project, Rio's project, that comes to mind. But I'd love you to kind of tie in with that the kind of consensus opinion around the EU Critical Raw Materials Act. I mean, we started the podcast, I think, almost 18 months ago or so, and it feels like we've been hearing nonstop about it, but not an awful lot has actually happened on that front. What's the kind of, sentiment towards action being taken from that, and the sentiment towards projects being mined within Europe?
Yeah, I mean, Europe just geologically doesn't have a huge number of good lithium assets. They tend to be quite small. They're in a high cost location. There's a huge amount of NIMBYism and legal challenges in Europe, for not just for extractive industries, but for any kind of, factory and part of the supply chain. So the Critical Minerals Act, is not particularly impressive when it comes to its targets and obligations for domestic raw material production. I think it realizes that, Europe's going to be a huge net importer. Its future's more in the processing of these things. So I don't expect to see a huge amount happening. There are a few projects to move forward. Yadar is probably the sort of exception, but in terms of the scale of European projects. But they're caught up with political protests in Serbia at the moment. There are tens of thousands of people protesting that mine every week. And that's probably going to lead to another delay. And yeah, that just shows, that the objection to extractive industries in Europe, it's quite often it isn't even anything to do with the mine. It is, they don't like the government. They just, they don't like the industry. It's very easy to delay things.
How do you marry those two up? Like, the first part to the conversation we've had so far is the acknowledgement that China is going to rise and dominate what's historically been a huge industry in Europe, the auto sector. And then on the flip side of that, I mean, I understand it's a huge question to put on you, but the second part of that is that they don't want to mine, okay, but even the industry, the factories, the processing, and these things, it seems a kind of tough one to marry up together, right?
Yeah. I mean, there is still a huge amount of investment going into the supply chain in Europe, whether it's in EV batteries, cell plants, cathode facilities, etc. The difficulty at the moment is when you're trying to finance one of these parts of the supply chain, say you're looking at a lithium refinery or cathode plant or an anode plant or something like that, to get your money, you need to basically have somebody who's going to buy your stuff and somewhere you can buy stuff from to produce what you produce. And at the moment, because you don't exist, it's very difficult for somebody to give you that order because they're taking on a risk. And then, we just see this sort of chicken and egg thing happening where people can't get the financing because they can't get the raw material. They can't get the raw material because they can't get the financing. And then you add into that some of the uncertainty that's happening, around the EV rollout and how quickly the OEMs are going to go to 100% electric, or, how many plug-in hybrids that they'll have in the industry. And it's really sort of stagnating a lot of things. And, the price environment doesn't help either. So the same way that we've seen, tens and tens of lithium projects and mines delayed, junior miners treading water because just nothing's happening in today's price environment, you also see that on the cathode side, on the precursor material side, on the anode side of the market. So, you do need some stimulus to come in. And now in the US, that comes in the form of government loans. That's still keeping a number of investments happening and moving forward. In Europe, it's a little bit more complicated because of state aid rules, but I think that's been sort of freed up, and we'll see a little bit more movement coming in. But also in Europe, you get the opportunity to have more Chinese investment.
What about stationary storage? I feel like this is a sort of part, like we've, even on this conversation, we've focused quite a bit on EVs specifically, but for the intended targets for what a lot of these policies are in place for, your you're either going to need battery stationary storage or other forms of, energy, whether that be nuclear or whatever, be part of the mix. Do you feel that is a bit underweighted in the conversation and in the models you see for raw material demand?
It's not in our models. It's not underweighted. We track it very closely, and it's an incredibly difficult one to predict because it gets incredibly local as to whether it makes economic sense. And it also, a lot of it depends on the individual vagaries of the power market pricing. The best way that I look at it is, you look at the huge growth that we've seen in solar, which is now, cheap as chips. You see that continuing in Europe because we've got to replace Russian gas, and replacing that with American gas is going to be quite expensive in the long term. You see a huge amount of solar rollout in the US. You see a huge amount of solar rollout in China. I think they've met their 2030 target already. And that really is the future for a lot of energy generation. And while, as soon as night turns to day, you're going to need batteries to help with that. So, a huge opportunity for the battery sector there. We've already, forecast that percentage growth rate of being a lot higher than EVs. Now, the barrier to that isn't availability or cost of batteries. It's actually comes down to the local view is, can you connect to the grid? Is the policy there to take these batteries onto the system? And there are a few other things, like transformers, inverters. There are bigger headaches for the ESS buyers that we talk to, rather than the batteries or the raw material in the batteries. It's actually other parts of that supply chain which are delaying implementation at the moment.
I find all this discussion about the battery storage. Do you call it BESS? Is it BESS? Is that what you call it? But I find all this discussion really
ESS,
interesting.
mate.
ESS. Why? No, I don't understand. Anyway, it's so interesting, right? Because it goes hand in hand with you lay a bunch of solar panels, and all of a sudden now you've got this variable kind of issue you've got to solve for, and the only way you solve that is with the battery solution as well. And thankfully, mate, I happen to know some guys that can do both of them for you on your bloody mine. Silverstone.
Who are you thinking, mate? Silverstone.
I am thinking Silverstone. They are pretty elite. They've done this so many times. They're just power experts, mate. If you're turning on a mine, you get them in. If you're shutting down a mine, you get them in, and they just make it a breeze. They're chucking the power stations. It's just that they are the trusted name when you're ramping up, or you're ramping down, or you're expanding, or whatever your niche like power solutions might be. I'm pretty sure. I think they could be out at Mount Morgan's with the old Dacian assets coming back on soon. So anyway,
mate, do you know what really stands out about the guys at Silverstone for me? The guys that run the company, they actually get out there themselves. They get out there, they do the job. So it's not like you're just pulling in these folks to fix up a one-time solution. They'll look after you.
As relatable as it gets. Bloody brilliant.
Silverstone.
Makes me want to work with them. Makes me want to go to a mine with them. And the economics, to invest or fund these projects are phenomenal for a period of time, right? While the arbitrage through the cyclicality is great, but then if you have sufficient penetration of BESS, then all of a sudden it's a much different equation too, right?
Yeah, so the sort of famous dot curve of Californian power prices. Once you've got enough batteries, then that's going to disappear, and you'll have a relatively constant power price, and potentially you'll have a very cheap power price. It gets a little bit more difficult when you come to seasonality, or even when you come to in the UK, periods of low wind. That can cause big issues because you then have to import a lot of energy. But yeah, the economics, the cheaper the batteries get, the better they get. And the other thing is, when you're looking at energy storage systems, you can depreciate those assets over years and years and years and decades if you need to.
And the chemistries of the stationary storage batteries, is sodium ion getting bigger there? Is it LFP at the moment all the way through? what's kind of going on that front?
We're seeing a little bit of penetration from sodium ion, but LFP is really the big game in town. And what's happening at the moment is lithium's so cheap, and the batteries are in such oversupply. It's just discouraging investment into sodium ion at the moment. So we're seeing a slower rollout on the sodium ion side. And interestingly enough, we're actually seeing a slower rollout on LMFP, which was seen as this, a higher energy density LFP. It's still cheap. Great. That's going to be, amazing, best of both worlds. Well, at the moment, it's just not as much point investing in it because, the LFP that you can get is just a lot cheaper because it already exists. So actually this oversupply is seeing a little bit of a slowdown in innovation being commercialized in the industry because, why build something new when you can't sell what you've already got?
And what about NMC? Is that just continued to go on the kind of trend of the last few years?
I mean, I think, the LFP story, you need to look at in a sort of China lens because LFP makes a lot more sense for China where it's much more cost sensitive. And the big barrier was cost to buying EVs and sticker price to buying EVs. And also where you get less long distance journeys because, you've got such a great high speed rail network. But when you look at Europe and North America, the main reason people don't necessarily want to make the switch to EVs is because of range anxiety and charging anxiety. And you answer that question by having a longer range, and you answer that question by having an NMC battery. So the dynamics in Europe and North America are slightly different, and they're slightly more weighted to NMC. They're slightly more weighted to lithium hydroxide, therefore over carbonate. I'm not saying that LFP won't take market share. As we move towards having entry-level models of electric vehicles, it makes sense for them to have LFP because there's a couple of $1,000 potential saving in the battery pack, and that's how you get entry-model vehicles. But when you're looking at luxury vehicles, when people want 350, 400, 450 miles range, that's still an NMC territory.
And we'd kind of heard on the Indonesia front specifically, obviously they were trying to encourage everything or rather force everything to be done downstream in country there. And that kind of led from what I could see to them importing nickel at times. What's your kind of view on how they go trying to get everything downstream? Obviously we've spoken about how hard that can be. Do you anticipate they run into hurdles there? Are there kind of ramifications that you're looking out for on that front?
Yeah, I mean, I've never been a fan of this sort of value add economics, where countries have some raw materials and they say, oh, right, we need to process it. We need to, we've got lithium. We need to build batteries. We need to build cars. And you're like, no, you don't. Not everybody needs Japan and Germany's, economic business model. You look at Australia, you look at Canada, you look at resource-based economies, you could be incredibly successful economies without having to produce cars. That said, for Indonesia, they are allowing the exports at the moment. They're encouraging investment, which makes sense for them. So, yeah, I mean, I think Indonesia is a big enough market that it makes sense to have some battery production there. My concerns over Indonesia are more on the environmental side, and particularly, when you group all of the nickel laterite assets together, you look at some of the environmental considerations there. It looks pretty worrying and pretty challenging. And while most nickel production growth will still come from Indonesia, I suspect that will slow over the coming decade.
So what about the like the idea of green premiums? This was kind of huge in Perth where we're kind of based, and heard sort of similar echoes in London and throughout Europe, given they can kind of see what's happening at a kind of buying level. It didn't seem to really deter too many people because the vehicles that come out or the materials that go into the vehicles that they buy are just that much cheaper. But from where you kind of sit in London there, is there a route to green premiums being sort of baked into London Metal Exchange contracts? Shaking your head already?
Green, if you need a premium, you read into it what you will. Right? If you can't commit, if you need a premium, you can't compete. The premiums, that said, they will exist, but they need to be supported by legislation. So in the US, we've got the Inflation Reduction Act, and you get some subsidies if you have non-Chinese material in your supply chain, and then you get a premium for that because it's baked into legislation. In Europe, you have the cross-border adjustment mechanism, which looks at the carbon intensity of supply chains, and that might give you a bit of a green premium, but it's legislation. Nobody's going to pay a premium just because of the ESG credentials without some kind of legislation to support it. It's just not the way purchasing works. It's not your target. Your target is to have the lowest cost. And I always say this: nobody in the world wants DRC cobalt in their supply chain. Nobody pays a premium for non-DRC cobalt, right? It's just these green premium concepts. I say they don't exist from an altruistic basis. The market doesn't develop them. They need to be supported by legislation.
I mean, to tie that on, then, do you see a world in where legislation becomes a part of it? Obviously, you could argue it's kind of captured with the Chinese vehicles having huge tariffs on them. But I mean, I think you still see the likes of Volkswagen, BMW buying their nickel from Indonesia too, right?
Yeah, and I think when you get sort of implementation of things like the battery passport, and when you get sort of a lot more transparency, which is what's absolutely key in this supply chain, then you'll start getting pressure to have lower environmental footprints. That's exactly the right thing, because that's what the market failed to do with internal combustion, and what it needs to do with the solution to internal combustion and climate change. So these are all good things, and the key is transparency, and then you will change behaviors. Just telling a purchasing manager that they need to pay a premium it just doesn't work.
Andy, I'd love to know what are the biggest misconceptions about the industry from where you sit?
I think a lot of the comparisons that people make on the environmental footprint of a battery electric vehicle versus an internal combustion vehicle, they're just they take the production of the vehicle and then ignore the rest of the life of the vehicle. So there's a lot of really false comparisons, and a lot of real sort of vitriol and complete rubbish that's published across the supply chain. You've then also got this really weird mix. You've got one of these sort of big solutions to climate change and the energy transition is electrification of everything, and that's where the battery side comes into it. But that means mining different raw materials, and there's this almost there's this psychological hate toward extractive industries because they're so much against oil and gas that the people just want the best. They don't believe in mining. Mining, it's almost sort of lost its social license in many countries. So people want the energy transition, but they don't want to face up to the reality that we need some changes in what we extract from the planet.
One thing cures that, and that's high prices.
Yeah, it helps. But when you've got a big change like this, you need to incentivize new producers. That's why the market's really interesting, because and why the current prices for manganese, for nickel, for cobalt, for graphite, for lithium, they're all unsustainable in the long term because they just don't incentivize new production that we need.
How about if you look forward, Andy, what are the kind of contrarian views, whether that be about lithium EVs, stationary storage? Is there opinions you have from like being in the weeds every day that you think, stand out quite differently to your peers in the market there?
Not hugely. We're at a conference here at the moment in Amsterdam. I was listening to some of the other analysts, and it's a little bit dull, to be honest. We're all sort of singing from the same hymn sheet at the moment that we are in an unsustainable position. We've got different views as to how quickly turning points will happen. Maybe different views on what's happening in industry positions. The one thing I would say is that the next turning point in the battery industry and, the lithium, price and explanation, it's a China story. It's a complete China story. Yeah, that's 70% of the market. Everything else is a price taker. So, we talk a lot about Europe and North America, but if you're interested in what's happening to prices and share prices and investment decisions, it's still a China story. So that's the one you need to track.
What is the China story right now? They're
on holiday. No, I say we're reasonably optimistic, and I'm not going to go through the whole Chinese economy and property prices and things like that. But when it comes to vehicles, when it comes to batteries, when it comes to that supply chain, we've stock levels have balanced. Inventory levels aren't as high as they were at the beginning of the year. Or if they are higher, it's because the market's 20 or 30% bigger. So you need a lot more pipeline stock. I think there's the good possibility that we'll go into a bit of a restocking cycle across the supply chain over the next couple of months. Traditionally, it's when buying's pretty high anyway in the fourth quarter. That could see a little bump in prices across the supply chain. You're not going to see a huge rally in lithium in the next couple of months, but you probably will see a rally. There's still inventory that needs to be cleared, but you could then have a more sustained rally relatively early. Most analysts are changing their view from 2029 to 2027, and some now saying 2026, or turning point in 25. So things are looking better. And obviously the production cuts speed up that market rebalancing.
Is your base case for a couple more Aussie spod producers to come out the market in the near term?
I mean, a lot of them are losing money, right? Most of them are losing money. So they're difficult decisions to make. I think now you've seen the announcement from CATL. A couple of them might give it a few more weeks or months before making those decisions. But it's difficult. It is. I don't envy the decisions that they've got to make. But probably curtailing production makes sense for a few of them, and then at least sort of slowing down on expansions.
Pretty ominous sort of stuff. We hope we can kind of pull through. But thanks for making the time and coming on the show, Andy. It's good to get your insights and good to hear from someone that's sort of boots on the ground, speaking with the people in the industry.
Thank you very much.
I'd just say, on the Aussie miner side, they'll be back because the world still needs that material. It's just a question of timing.
Some good, positive note for people and investors out there to kind of end the show on. Cheers, Andy.
Cool. Thanks, guys. Bye.
How about that, JD? That's a wrap for Friday. Learned a lot, and we've got some partners.
There we go. Thank all the money miners out there for tuning in. Hope you all have a good weekend, and a big thank you to Axis Mining Technology, Mineral Mining Services, VRIFY, ADIA, DSI Underground, Silverstone, who we had in the show, CRE Insurance, Greenlands Equipment, K-Drill, and Spark. Hooroo, money miners.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.